What's up, guys? I want to show you the simplest strategy for trading the stock market that you'll ever encounter. And I want to use Nvidia as our example. Stay tuned for this episode of Trading Tricks. All right, we're back. I want to introduce to you an amazing strategy that worked really well, tested really well, and I want to share it with you today. It's called the 15 simple moving average trading trick. It is the simplest strategy you will ever encounter on YouTube, anywhere you find. Okay, literally all you have to do is load your chart. As we see here, I have my daily chart of Nvidia recently trending because it outbeat its expected earnings this quarter. And I want to use it as an example, but you can use it on any stock, any chart. Okay, so here is Nvidia today, right? I'm going to go back. I mean, you can go start wherever. Let's start right here, okay? September of 20. This strategy cannot be simpler. When it breaks above the 15, you buy. When it breaks below, you sell. So let's look at this. So here it's consolidating, right? Breaks above, get in here. What would happen? You would make that trade. As soon as it starts to downtrend, you'd want to get out before it goes back to the 15 because you want to take those profits. But again, breaks below, goes lower. Breaks up, goes higher. Let me zoom in so you can see this. And there's a lot of consolidation here. Breaks below, goes lower. Then it consolidated, kind of went up, broke up, went higher. Broke below, went lower. Broke up, went higher. Broke down, went lower. And now here it really starts to pick up around May 21. Broke up, held. You would probably get out at this green bar here because it's getting close to the moving average. Okay, then it kind of held. And then I put in this red bar, you'd get in here, get out. I think you're getting the point, but let's go to where we are now. I mean, we can go through this. Let's go through this kind of choppy area where it went. If you get in here in this bar, this green bar here, then you go up. I would probably get out in this red bar here, but it would be a great profit. Pulls back to the 15, bumps up again, but it's a red bar. It's kind of choppy. You don't know what to do. I mean, you could still hold it if you wanted to. Then it breaks below here. If you got in on this red bar, you would still make profit on this green bar. But this area here is just, remember, you don't trade just with lines. You trade with, do all the factors fall into place? And this area is very junky. I probably would not be trading this area because it's not very smooth. There's no defined trend here. It's just kind of all over the place. But then here we see it breaks down below, falls down, kind of smacks but doesn't break the 15 here. Still goes up a little bit and holds, breaks up, holds. Again, this is kind of a junky area. It's just going up and down. But the point is, every time, see here, you get up above the 15, you hold, and it goes up. Break below the 15, and this is the simple moving average. This is not exponential. This is the simple moving average. Okay, break down, go all the way down, broke up here. You could probably get in if you want to. You would make the win. Break below. So generally, this strategy seems to work really well. If you have a good setup and all the other factors are coming in line, everything's falling into place, this strategy is a pretty reliable one based on this testing that I'm doing here. And this is us currently. If you got in here at this green bar right here, you would hold. And then I would probably get out here at this red bar, right where it comes back to the 15. I would get out because I don't know if it's going to go lower or not. But it indeed held, and then it kind of broke below. And now, where are we today? It gapped up, okay? It gapped up. And so now you could get in here and you would ride this thing up to the next area of resistance, which is 289. But I would be hesitant. Why? Because if you go to the higher time frame, going back to our principle of multi-time frame analysis, if you go up to the higher time frame, the 1 week, you see that it's pretty extended on the weekly chart here. It's pretty far away from this 15 moving average. So I don't know if it's going to want to make a pullback first. So I have a hard time bringing myself to get in here. You could get in and you could definitely win big, but I hesitate. It's not a surefire trade for me. But we could even use the 15 SMA example on the weekly chart. Look at this. All this, look, held above. If you get in even here, you can make this trade here and you win. If you get in here, you hold. I'd probably get out on this red bar, but even if you didn't, you would still make the win all the way up. You'd probably get out here because it's now breaking below the 15, but then it breaks up again. Boom. So the 15, again, I've made numerous examples in this video, but it seems to work really well. And you can use any instrument. Let me pull up SPY. SPY works great too. Look, this is the weekly chart. If you got in where it broke above the 15, even if you got in here, you would make a win. If you got in here, you would make a win. And right now we're at a pullback to the 15. So we're kind of in a waiting zone. So I want to see if it's going to put in the green bar. If it does, I'm going to get in. Daily chart, same thing. Get in when it breaks above the 15. You would make the win. When it put in this red bar here, you'd probably get out, but you'd still make some money. So it's very simple. It's very easy. Consider all your factors. Take the trade as a whole, as we talk about in every video. Don't just trade based off of moving averages. But this is a pretty cool and simple way to start trading using the 15 simple moving average as a guide. So that's all we have today. If you like this content, like, share, subscribe. I'll have way more coming in the future. And you're listening to another episode of Trading Tricks. Thanks, guys.